Picture this with me. You're standing on the edge of a massive vault door, steel, smooth, cold to the touch. And behind it, trillions of digital dollars. Not cash, not coins, but code. Pure light moving faster than thought. Some of it's yours. Some of it isn't yet, but all of it looking for a home. Now imagine somebody hands you a key, but before you can turn it, they say, this key only works if you understand how money actually moves, beneath the headlines and beyond the hype. Today we're unlocking the vault because the financial system is shifting, because a new kind of dollar, digital, traceable, programmable, is being born. And because the oldest game in finance, buying and selling treasury bonds, is suddenly right back in the center of it all. So what does this mean for interest rates? What does this mean for borrowing power? What does this mean for your wealth strategy? So let's open the vault together. Welcome back to the heartbeat of money, where finance meets soul, where legacy meets liquidity, and where we dig deep beneath the numbers to understand what really is driving your wealth, your future, and your freedom. I'm your host, Jon P. Moffitt, and today we're going to talk about a quiet but powerful shift that's happening in the background, one that involves digital currency, U.S. Treasury bonds, and interest rates, and your financial future. Are you ready? Let's dig in. You may have heard that there's a bill making its way through the system. It's not a law yet, but it's gaining momentum. And it would require all stablecoin, that's a digital currency like the USDC or Tether, to be fully backed 1-to-1 by US dollar or Treasury securities. Sounds simple, right? But let me tell you, this changes everything. Why? Because every dollar of digital currency has to be backed by a real dollar asset, especially short-term treasury. That means billions, even trillions, can start flowing into government bonds. And when that happens, it hits the interest rate market like a wave. So let's talk mechanics for a minute. Stay with me, because this is the heart of the story. When massive players, whether it's governments, institutions, and now stablecoin issuers, start buying treasuries and treasury bonds, demand goes up. And what happens when demand goes up? That's right, prices rise. But here's the kicker. When bond prices rise, interest rates fall. That's because of the yield, the return you get. The return you get is inversely tied to the bond price. So what we're talking about here isn't just a crypto regulation, it's a monetary policy earthquake. Because of billions of dollars in demand are funneled into the treasuries, it can start pulling down short-term interest rates, even when the Fed is trying to push them up. Think about that. This could counteract the Fed's strategy in real time. Now, here's where it gets deep. The Federal Reserve is trying to balance inflation, growth, employment, and now this whole new digital financial ecosystem. If stablecoin issuers are buying up treasuries, the Fed might have to adjust its strategy. They could raise the Fed funds rates higher than they planned, or they could increase quantitative tightening, selling off more bonds just to keep rates where they want them. And here's another layer. This strengthens the case for central banks' digital currency, a true digital dollar issued by the Fed itself. Why? Because private stablecoins are influencing monetary conditions. And the Fed might say, hey, we need to stay in control of the money supply. We can't outsource this. So now we've got a power struggle between innovation and control, between decentralization and central planning, between Silicon Valley and the central bank. All right, let's bring this home. What does this mean for you? If you're a business owner, an investor, a borrower, heck, even if you're just trying to buy a house, it all comes down to what? Interest rate. Lower rates means what? Easier access to capital, higher asset prices, and a boost to borrow or refinance. But if the Fed fights back and tightens harder to offset the demand, you could see a steeper rate environment. You could see slower credit access, and you could see a tug of war in the financial markets. So this stablecoin policy, it's just not, a crypto nerd stuff. It's the heartbeat of money itself. It's the effect, uh, and it affects your rates, it affects your returns, and it affects your risk. Listen, I'm not here to predict the future, but I am here to help you prepare. We're entering into a new era where digital dollar meets old school bonds, where financial innovation meets government regulation, where your liquidity strategy might need to include not just cash and credit, but also digital assets, tokenized capital, and modern money frameworks. And the more we understand how all these systems interconnect, the better we can move through them with clarity, with peace, with legacy. And that's what this podcast is all about. So let me leave you with this. If you've ever watched a hawk in the sky, gliding, adjusting, balancing, you see something most investors miss. Precision doesn't always look like speed. It looks like awareness. That's what this new financial era demands. It's not about jumping on the next shiny object. It's about understanding how law and about stablecoin can change your mortgage rate, how a flood of digital dollars can tilt the bond market, how your legacy is shaped by liquidity you can't even see. So pay attention to the wind, to the signals, and to the stillness before the move. That's what the heartbeat of money is for, to keep your pulse tuned to the financial truth underneath the noise. If this helped you, share it. If this stirred something up in you, don't let it sit. Let it shape your next financial decision. And if today's episode opened your eyes or made you rethink how digital money and interest rates really work, do me a favor. Share this with somebody who needs to understand how money really moves in today's world. And if you haven't already, please subscribe to the Heartbeat of Money. We've got a new episode we drop every Sunday at 7 a.m. You can also find me on Instagram, LinkedIn, TikTok at nextstagewealth.com or Mastering Business Transitions. Until next time, I'm Jon P. Moffitt, reminding you, your financial future deserves more than strategy. It deserves a soul. We'll see you next week.